Hello, everyone. Welcome to episode 26 now of The Bottom Line. I'm pleased to join you again, as always, by my co-host Syed, and we have a very special episode ready for you guys after a bit of a hiatus from us. So as usual, Syed will kick things off with his tech update, and then he'll dive into the world of cryptocurrencies, talking about Ethereum 2.0 and Solana X. I'll also be taking a deep dive into some of the China news we're seeing and how that's affecting Chinese companies in particular. Most recently Didi, which is a recent IPO. I'm also going to talk about an international tax crackdown that they're talking about, as well as briefly summarizing what's going to happen in earnings season over the next week. So this upcoming trading week will see the start of earnings season from most of the financial districts. So we'll see a lot of major banks reporting earnings. So definitely something to keep an eye on. And Syed will also closely analyze Elon Musk's Twitter activity over the past weekend. So curious to see what that is all about. And lastly, we're going to end things off with our stock picks for the upcoming trading week. So lots to cover today. And with that being said, the floor is yours for the tech update.
Thank you, Deepak, for the introduction. We did take a bit of a break, but we'll try to get you all caught up with everything. So here's the tech update for you guys. And as always, hope you guys are doing well and staying safe, getting vaccinated, and all that stuff. But let's get started with the tech update and get you all caught up. So first, I wanted to talk about a brute force attack, a widespread brute force attack tied to Russia's APT-28, and this was from July 2nd, so last week. But basically what's going on is that attacks are targeting cloud services such as Office 365 to steal passwords and password spread for vast range of targets, including the U.S. and European governments and militaries. And the FBI believes that this is Russian-based. Once again, I'll leave the article in the description below. It's on threatpost.com. You can read more about it. But essentially, it's using Kubernetes. And so it's a great read, and be sure to check that out. Moving on, we want to talk about Samsung. So Samsung Galaxy had a leak on July 10th, which is today, and basically the photos of their phones, watches, earbuds were leaked, and their period is set for August 2021, so next month, in an unpacked event. And I was just looking through it, and their new phone looks really nice. So be sure to check that out. They also have a new watch coming out, and they also have their own pods coming out as well. So if you're a Samsung user or Android user, be sure to check those out. The phone looks amazing, and I can't wait to see it launch in August. Next up, we're going to talk about the Printnightmare vulnerability that happened. So basically, Microsoft announced that the print spooler, so basically that's the printing service on all Windows computers, they were vulnerable to remote code execution and unauthorized access. So what essentially happened was that Microsoft announced this, but they didn't release a patch. And this vulnerability is very dangerous because threat actors can initially execute code and get unauthorized access, such as an unauthorized shell, and pretty much get into stuff your unauthorized files and all that stuff. And since everybody has print spooler enabled by default, right, because it's a printing service, right? This is very dangerous. Basically, the proof of export code is floating around the internet, and the hackers just need to make use of the UNC to pass the patch, right? So basically, again, you can read details on it, but this is really big news, and Microsoft did work on the patch, and keep an eye for the patch, and be sure to make sure that you're safe out there when you're trying to print anything or stuff like that, because like I said, print spooler is enabled by default on Windows computers. Next up, another ransomware. So when we talk about an IT company named Kaseya, and basically this giant ransomware attack, there was a giant ransomware attack against Kaseya, and it might have been entirely avoidable because talking to former staff. And this is again Bloomberg. It's not Bloomberg, so be sure to check that out. But essentially, they claim that they warned executives of critical security flaws in Kaseya's products several times between 2017 and 2020, but the company didn't truly address them. Multiple staff either quit or said they were fired over inaction. What does this remind you of SolarWinds back in December? That's what I initially thought of. So again, we see what really happened, and essentially they were using old code implemented for encryption and even failed to routinely pass software, and that's a major security flaw right there. The company's virtual system administrator, so VCA, the remote maintenance tool that operated ransomware, was supposedly rife with enough problems that workers wanted software replaced, but no one did anything. No one replaced anything, and that's why they were victim of the ransomware attack. Right? One employee even claimed that he was fired 2 weeks after sending executives a 40-page briefing on security problems, but again, no one did anything, and essentially employees ended up leaving, and as a result, they got a ransomware problem. So it's supposed to show how security is still taken lightly by organizations, especially tech companies and IT companies, and as a result, they fall prey to these attacks, right? Now, moving on from that, I wanted to also talk about Apple as I myself actually tried the new iPad OS 15 beta, and there's articles on it too. But it's pretty. It looks pretty good to me. Like they've made updates to the Photos app. Safari looks much better. Apple Music looks much better. Apple Music looks better too. Apple Podcasts is much better too. Just like the view, the interface looks better. The Apple TV app looks better too. So yeah, if you can get your hands on the beta, definitely check it out. But if not, just wait till September and be sure to update. It's really good. It's a really good update, and I feel like iPad users are gonna like it. And then related to that, we can also talk about the iOS 15 update for Apple's iPhones, and same thing. Like I tried the beta myself, and it's pretty good, and it's slated for release this fall. But this week, like we got hands on with the public beta, right? And and then there's an article on this too, which I'm referring to, and my personal experience as well. But iPhone users have a lot to look forward to later this year, like you can there's a lot of updates here. So you can use Amazon's Echo command here, and also there's you can when testing it, like share, play, and focus modes are great. Also like the display is great. So yeah, this article goes on, but when I initially tried it, the face looks the same, but they just made a few changes to like the task, the bar below, and yeah, so it's still in early beta mode. So I'm looking forward to see what the next beta upgrade does, and then obviously in the fall and the full thing release, we'll see what happens. But every fall, I'm looking forward to the new iOS, right? So it's gonna be good. And then next up, I wanted to talk about Windows 11. So this happened like I think 2 or 3 weeks ago. Obviously, we took a bit of a hiatus, and we couldn't provide content, but thought I would talk about Windows 11 a little. As if you may or may not know, it's been officially revealed, sorry, and it looks pretty outstanding. But only time will tell, right? If it improves on Windows 10 and meaningful ways. There's a whole article on it, and basically the new OS features a refreshed design that includes a centered taskbar and the rounded corners, and beyond that, Microsoft Teams is going to be a staple of the OS, and gamers and with PCI Gen 4 compatible parts can expect awesome gaming performances. So that's great news for gamers, and I'm looking forward to this. There's also a new widget panel that slides over from the left hand to give users a fun place to store quick access to it. Adding even more productivity features, users can also get access to an enhanced version of the window snipping tool, basically. And Windows 11 you can quickly and neatly organize 2 or 4 apps in once. So that kind of makes me think that they're going towards like an Android approach or an iOS approach, where you can like concurrently run applications and then get rid of them, right? Like you can on iOS and Android. So yeah, looking forward to Windows 11 when it releases at the end of this year for update. And then almost done here. We want to talk about Neo and how they have 4,000 battery swapping stations globally in 2025. Like they expect to have 4,000 battery swapping stations globally by 2025. So this is again, I'm referring to a Yahoo Finance article. Basically, what it says is Chinese electric vehicle maker NIO plans to have 4,000 battery swapping stations globally in 2025, as its president Jin Leon said on Friday, so this past Friday. And the company, which makes premium electric cars, aims to have 700 battery swapping stations by the end of this year. And the battery swapping station will allow drivers to change the battery in their cars to power the roads. And we've talked about this before, but again, this is great news for NIO, and we did see the stock rise a bit. Not this week, but like the week before that. And yeah, this is great bullish news. And as with our previous episodes, we've seen that I'm pretty bullish on NIO, and this is just great news in the right direction as we all know EVs the future, and NIO is going to play a major role in that. Perhaps be runner up to Tesla, even surpass it. We'll see. Next up, more Apple. So there's a leak about Apple glasses, basically. So Apple Glass could redefine wearable computing, basically. And there's an article that I'm referring to here, but basically it's reality glasses, right? Augmented reality glasses by Apple, and it could be a futuristic wearable product that overlays graphics in the real world around you. Like when we first heard of like Apple glasses, right? Rumors, it suggested that the lenses would launch as soon as this year, but based on news leaks and other insider intel, it looks like the near future Apple augmented reality glasses looks blurry, and it's gonna come like sometime in 2022 or 2023. But I thought I'd give a little outlook of what's to come with Apple. So yeah, I can't wait till those come out actually later for that. I'm looking forward to see what Apple does. But yeah, that wraps up my tech update.
So thanks, Ed, for that tech update. I wanted to just briefly transition into some of the China news that we've been seeing more recently surrounding regulation and data protection that we're seeing. And for the last little while, it's had an impact on e-commerce giant and Alibaba, which you've seen over the last number of months has been on a steep decline. But another Chinese company that really IPO'd more recently was Didi, which is a ride-hailing company you may or may not be familiar with, but it's very popular in China. But again, there was another crackdown on there. There's more legislation being passed. I don't know if it's actual legislation yet or not, but there is more regulation around these companies. I think they were actually delisting it from the App Store, or maybe talking about that. So there's some sort of barrier being placed here, and that's really having an impact on the stock performance. As you can see, it's down almost 15% from its IPO. But I think a lot of this is really what we call FUD, right? Fear, uncertainty, and despair, which you saw in Bitcoin. And obviously there was some China tension within cryptocurrency, which side you're very well versed with. Yeah. But it's also transitioning into these big e-commerce giants as well, like Alibaba I just mentioned, and now Didi here. It seems like there's obviously a lot of tensions between the U.S. and China, given the entire pandemic situation, and then the political unrest, right? That does lie between the two parties here. So I think a lot of this, in my opinion, obviously I don't know for a fact here, but I think this is creating a good buying opportunity in the grand scheme of things, because I don't think that we'll actually get to the extreme point of delisting, obviously, right? Like I know before they were talking about delisting Alibaba from the NYSE, and at that time I figured like there's no way that could possibly happen, right? And if we run with the assumption that that's not going to happen, then this is actually creating historically great buying opportunities, right? Because Didi is actually very well run business. It's very popular. It's not one of those pump and dumps that we've been accustomed to seeing in the marketplace. So I think it's a great company. Like Jim Cramer even mentioned on his show, Mad Money, for those who watch. He was saying before that, like, this is a great company. You should probably buy as many shares as you can at these prices. And at that time, I think it IPO'd around $15 per share. Now it's down to about $12 per share, right? So I know he took a lot of heat for recommending that. But again, a lot of these downward movements are coming from this fear and uncertainty as to what these Chinese companies will look like and whether they might be delisted from the New York Stock Exchange, right? So obviously the most money is made trying to capitalize on these moments, right? And if you see an Alibaba being down like 25% or whatever it's down from its all-time highs, like that to me creates a great buying opportunity. And if you do feel like, okay, tension aside, things will eventually pan out and they'll go back to normal, then this will create a great buying opportunity for you. So again, political ties or political unrest aside, if you think that this is a great company, DD in particular, which I do, I'm still going to put money in there. I might be a little bit more reluctant to take a heavier position, obviously, with the uncertainty. But in my opinion, it's not a bad idea to just take a starter position, just continuously just monitor the situation, right? Obviously, if something fundamental changes between now and in a few months, then we can reconsider. But for now, I don't think that we'll take the extreme measures that a lot of investors speculate that we will. And with that being said, this will create a good buying opportunity in the long run. So I just wanted to bring that to everyone's attention. We will provide the link to this article in our description, so you can obviously have a read on your own and get more granular details about it.
Thank you, Deepak, for all that, and sticking to going back to EV, I should say. Not EV, but crypto, I should say. I had EV on my mind because we were talking about China and how they then the other companies getting delisted.
Yeah. NEO is another big company I forgot to mention, but they're also going. They're going through what I think is price depression as well. So again, that's another great company to keep in mind, right?
Yeah, but moving on from that, as we know, China is a major player in cryptocurrency as well, and but I'm not going to talk about China here. I'm just going to talk about the Ethereum. Before moving on, talking about Ethereum, I quickly wanted to talk about Solana X, and if you go back to episode 24, I did talk about Solana X in detail, so be sure to check that out. But basically, I wanted to tell the viewers that Solana X has now started their second IEO round. So the IEO has been a recent innovation in the cryptocurrency space, right? And Solana X, a Solana blockchain-based automated market maker, right? It has recently started getting momentum in the cryptocurrency community for its upcoming IEO, as it's going to be one of the fastest cross-chain decentralized exchange in decentralized finance or DeFi space. And basically, there's details on how you can participate in the IEO in the second round. And just for starters, if you're new to the crypto world, I'll quickly explain what an IEO is. It's basically an initial coin offering or an ICO. And it started losing shine in a couple of years, right? And the public trust diminished in the process. So that's an ICO. Now, an initial exchange offering or IEO is a process where cryptocurrency exchange administrators oversees the token sale from the launch via a comprehensive vetting process, thus helping to build public and community trust in the crypto project. So that's essentially what an IEO is, and that's what happened. And this is round 2. So be sure to keep an eye out, and quickly going to go over some of the benefits here of the Solana X IEO. So basically the IEO passes through a comprehensive vetting process by the crypto exchange, or you won't do that. The crowdfunding drive or the cryptocurrency launch also gets publicity because of the efforts from the exchange teams. The exchange will provide immediate trading opportunities for the Solana X token, and that's a major great benefit there. And then lastly, the Solana X IEO is associated with the well-known exchange and will get support from its community. So thought I would update a review on the Solana X second round IEO. So yeah, keep your eyes on that. And if you have any questions, let us know. We can provide it for you. I just went very, very high level here because we do have lots more to cover. And so moving back to Ethereum now. So I did briefly talk about Ethereum's London hard fork, right, and how it's scheduled to commence on August 4th on our social media. But I thought I would talk about it in a bit more detail. So basically, the highly anticipated Ethereum hard fork is expected to now launch on August 4th at a block height of 12,965 12,965,000, according to Ethereum core developers. The London hard fork will add 5 Ethereum improvement proposals, EIPs, and I talked about what EIPs were. But basically, these EIPs aim to enhance the blockchain, such as lowering the gas prices, faster transaction speeds, stuff like that. And basically, the London hard fork is a part of those IEPs, right? And it was scheduled for July, and now it's scheduled for August. Now, the London hard fork is a foundation for Ethereum 2.0, and it's one of the most long-awaited changes in quite some time, and will follow the recently Berlin hard fork that was implemented to the Ethereum blockchain. The London upgrade is meant to complement the Ethereum 2.0 transition, which will change the Ethereum chain from proof of work to proof of stake. And I already went through that in, I believe, 2 episodes ago. So be sure to check that out. And if you have any questions and want comparisons between proof of work and proof of stake, we can provide a detailed comparison. But essentially, you can think of it this way: that proof of stake is faster. So yeah. Now there are tweets out there where the reports are that Ethereum core developers have proposed a block of 12,965,000 for London upgrade on mainnet, and it's expected around August 4th. And then there's GitHub links too. And then there's also an Etherscan link, so you can check those out, and I'll put the links in the description. And then also Bitcoin.com news reported on 3 Ethereum testnets preparing to leverage the London hard fork. Now that the implementation has been successful following adaptations to the testnets, pull request number 223 was officially merged as well. And won't get into too much detail on what that is, but essentially it's just an upgrade, it's just a part of the process of like how they're upgrading. So I thought I would update our viewers on that. And once again, we all know that Ethereum 2.0 is going to be a game changer, right? And just going over the biggest changes, it's basically going to include EIP 1559 and EIP 3554. And I already mentioned these, but I'll quickly go over them. EIP 1559 will change Ethereum's fee rate to a new scheme that makes the crypto asset deflationary, basically reducing the gas prices, right? And then EIP 3554 messes with the miner's difficulty to ease the transaction from proof of work to proof of stake. Additionally, the upcoming fork will allow further EIPs, which I won't get into in detail, to basically reject new contracts, starting with the specific byte. But I'm not going to get into that in detail. We can, at a very high level, you just need to know that Ethereum 2.0 is being worked on, and this is a great sign. As August 4th, the London hard fork is set to launch. But yeah, that wraps up my crypto update for this week, and I'll keep you guys updated on more as further news develops.
All right, so thanks for that, Syed. So now just moving on to our next segment, I wanted to actually bring to everyone's attention another article from CNBC that we'll provide in the description to this video. That's titled G20 Financial Leaders Agree to Move Forward on Plan for an International Tax Crackdown. So what exactly is that? So basically, the G20 is a forum for the governments and central bank governors from 20 major economies. In a meeting of the group's finance ministers and central bank governors, leaders endorsed components of a tax plan, including the reallocation of profits of multinational enterprises and a global minimum tax after many years of discussion and building on the progress that was made last year. So the group will aim for national leaders to approve the plan at a G20 summit later this fall in October. So according to Reuters, the pact would establish a global minimum corporate tax of at least 15% in an attempt to prevent multinationals from shopping around for the lowest tax rate. The agreement would also shift the way companies like Amazon and Alphabet's Google are taxed, basing it partly on where they sell their products and services instead of the location of their headquarters, which, just going back from accounting knowledge standpoint, obviously a corporation's deemed to be resident where its headquarters are established. So this is changing that aspect, right? So now even if your headquarters are overseas in more of a tax haven sort of country, if your predominant sales are actually happening in the U.S., for example, then it's going to be taxed on based up, considering it to be a U.S. corporation, right? So that's going to change how these major companies are taxed, and for the longest time, they've been able to avoid paying significant amounts of tax due to these different tax saving mechanisms, right? So again, this summit really is going to drive a shift in that. Obviously, this is more important from the consumer standpoint as well, just because of the fact that we have such a big deficit running with the government having to pump out so much additional capital to provide support over the course of this pandemic. The common sentiment was the fact that ultimately us as consumers have to bear the burden of it. So if we are shifting a little bit more of the onus of paying additional taxes to corporations, I think in the long run it'll ultimately help us as consumers. So this is something that's pretty incredible to be even having made this kind of progress already. It remains to be seen how quickly it is passed and how quickly it is implemented, but I think it is definitely a great step in the right direction to ensure that our economy not only has continued to stay stable over the course of the pandemic, but even with the pandemic in our rearview mirror, that we're able to sustain a booming economy. So this is a step in the right direction, and it's something to definitely keep your eye on when October rolls around.
Deepak, so on to our next topic that we wanted to cover. I wanted to talk about Elon Musk and his social media activity on Twitter. So as you know by now, that Elon Musk is his tweets influence the crypto market whenever he tweets something. And it recently, well, not recently, but like I guess since Dogecoin became a meme, right? Elon Musk has been behind it, right? And it's all with SNL Live back in April. And now he's at it again. But this time, so I was actually looking at his Twitter. So it's essentially Matt Wallace, and for those of you that who don't know who that is, but he's basically a top crypto and Dogecoin YouTuber. And he tweeted, quote, and again you can see it on your screen. I'll put the link in the description as well. But he tweeted, quote, reminder: the Dogecoin update is coming soon. It will position Doge perfectly to become one of the most used currencies in the world. Now, Matt Wallace tweeted this at July 9th, right? Like at around like 1:15 a.m. Eastern time. Now, Elon responded to this at around 2:15 a.m. Eastern time and July 9th, as seen on the screen. He basically said to Matt Wallace, and he replied to his tweet. He started out by saying, quote, BTC and ETH are pursuing a multi-layer transaction system. The base layer transaction rate is slow and transaction cost is high. There is a merit, in my opinion, to Doge maximizing base layer transaction rate and minimizing transaction cost, with exchanges acting as the de facto secondary layer. So might be a lot to process because he did go technical, but he's essentially saying, Elon Musk, is that Bitcoin and Ethereum basically are not it. Like they're slow and they have really high transaction fees. And we've talked about that a lot too, for how with Ethereum, it has really insane gas prices, right? But essentially what Elon Musk is saying in this tweet is that the Doge update that's about to come, it's essentially going to minimize transaction costs, and basically the exchange transaction rate's going to be faster too. Now, I'm not too sure if he's trolling. I honestly haven't looked into the Dogecoin update, no clue what they're doing, but like we all know Doge is a meme coin, right? So I feel like Elon's trolling again here, but just looking at the replies to this thread, I feel like he's definitely trolling, because just looking at the thread, people are like telling him why Doge has no future essentially, and then how it's quote unquote garbage or shitcoin, right? So he's back at it again, and I believe when he tweeted it, the price of Doge did go up about 2 cents to around 22 cents. But then I'm not sure where it is right now, but yeah, it did go up, but then I think it went back down. But we can always look at the charts later to confirm that. But yeah, Elon Musk is back at it as he always is. And yeah, I wouldn't be surprised if he keeps doing this and tries to get those back up. But yeah, it's an interesting thread to look at, and some of these comments are really funny. People are trolling and all that. But yeah, take a look at it, and it's a great. If you want to laugh, check it out.
Okay, so yeah, no, thank you again for that, Syed. Elon Musk is definitely a very polarizing character. Some people love him, some people hate him. Especially in the cryptocurrency land, everyone loved him initially, and towards the end, with this massive sell-off, not so much love for him anymore. But hopefully things change, right? So we'll definitely an interesting person to follow on Twitter. Let's just leave it at that, right? Moving on now, I just wanted to get our viewers up to speed on upcoming earnings season. So we're actually going to have second quarter earnings reporting season underway in the week ahead, and eye-popping results really is what investors are really hoping for to validate this massive run that we had towards the end of 2020, and obviously that's continued into the first 6 months of 2021, right? So in fact, they're actually expecting that second quarter profits for the S&P 500 companies to be up something up to about 65% from the same quarter a year ago. So clearly there was lofty expectations about the recovery and how quickly it's transpired. So we'll definitely keep an eye on that. They're also anticipating that the growth will actually be led by a near 570% increase in profits for industrials, which is obviously one of the hardest hit sectors during the pandemic. So again, a lot of optimism out there. It remains to be seen if they'll be able to live up to that, right? But speaking of the S&P, we're just tracking that as well. On Thursday, you might have seen like there was a significant sell-off in the broad markets. Even the big names were taking quite a bit of a hit there, obviously, along with the growth stocks that we've come to love. But Friday saw a significant rebound, and everyone's overly optimistic again. I shouldn't say overly optimistic, but cautiously optimistic is probably the better term to use here. Seeing that we're at all-time highs once again, there's a lot of hope that with the vaccine rollout and everything coming back to normal slowly, that we're headed for a decade of significant growth ahead, and that's starting to get priced in, right? So the financial sector obviously is starting things off with earnings season. You're going to see reports from JP Morgan, Goldman Sachs on Tuesday, Bank of America, Citigroup, and Wells Fargo all report on Wednesday, and then Morgan Stanley reports on Thursday. So it's interesting just having a broader view of the financial sector. You've seen over the last probably month or so, the financial sector has seen a little bit of a sell-off. Some of them actually dropped as much as almost 10% over the last month. And really what a lot of people are pointing to is the fact that the treasury yield, which saw a significant spike up that really spooked a lot of investors, it retraced quite a bit. And it's interesting how the narrative changes when the interest rate drops. It's because potentially they're worried that, okay, the economy is not going to recover as fast as we anticipate it will, right? And that's obviously reflected in the interest rates. So and then likewise, if the interest rate rises, then we get spooked with, okay, the growth stocks, they're not cash flowing as much now. Their valuation is based on future cash flows, which mathematically, if you have a higher interest rate, that's going to bring that valuation down, right? So it's kind of a double-edged sword with the interest rates, right? But sticking to the financial sector, I think we have probably bottomed out now in terms of yield. So we're likely going to continue in that trend of rising rate environments, which ultimately is very good for the financial sector, because that's how most of the banks obviously make their money, through interest, right? So I think as interest rates continue to steadily climb up, you're going to see stronger performance from the financial sector. And I think in the immediate term, I don't know if they'll be able to meet the expectations that are quite lofty already. So perhaps it is a disappointment this upcoming week. But again, in the long term, I think the financial sector is looking very healthy. So definitely something to keep an eye on over the next week or so.
All right, thanks for that, Deepak. Now, moving on to our last segment, we're gonna just talk about our stock picks for this upcoming trading week. So for my stock picks, I'm gonna go. I'm gonna. I choose Zoom because first of all, like Zoom, as we know, it's been a vital part of COVID-19, right? And like the new norm, just adapting to the pandemic with virtual meetings and stuff like that. But as we get back to the normal life, right, I feel like Zoom's going to still play a major part because the new norm, and we talked about this before, but the new norm is going to be basically like hybrid work, right? So some virtual, some in person, right? Like I feel like people and companies have found out that working virtually can be effective and it can be productive, right? So with that being said, I chose Zoom, and there was a specific reason I chose Zoom as well because they launched a update. And I'm just gonna pull up my notes here. But on June 9th, Zoom launched Zoom phone appliances, which is basically a new category of hardware designed for the hybrid workforce. Now, hybrid is the key word there because as we get back to normal, as I mentioned, right, a lot of companies and people are going to prefer the hybrid approach. And basically, this new offering includes video and audio capabilities, touch display, interactive whiteboarding, and related services. So they're working really hard to enhance their service. And as they know themselves, even if the pandemic ends, everybody gets vaccinated, everybody's able to go back in person. Still, like virtual meetings and all that stuff is still going to happen because, as I mentioned, right, people and companies realize that sometimes you can meet virtually and still be productive or even more productive than you can be in person. So with that being said, let's just look at the charts real quick. The chart real quick for Zoom. I just wanted to give our viewers, as you can see, I'm going to just start with the 1 year chart. Actually, I'm going to start with the 5 year chart just to show for those of you that may or may not know. But like prior to the pandemic, it was trading at around like $73, and then it was in the 60s and 70s range. But then the pandemic hit right here in March 2020, and it just went up. And obviously, because everybody started working remotely and all that, I had a high of 559, and then it stayed around like 300 and 400 range. But I feel like even if you look at like the 1 year chart, like it was like just a year ago it was at $260, and now it's sitting almost $100 more, right? So 47 increase, so 47% increase. Now, do I see another 47% increase within the next calendar year? I don't know. I can't say that, but I do know that Zoom isn't going anywhere, and people are still going to use Zoom even when life gets back to normal for their day-to-day lives. So that's why I thought I would mention Zoom for a long-term outlook, not just for this trading week, but a long-term hold for our viewers. But yeah, Deepak, I'm going to throw it to you as you can talk about this ETF that you have here.
Yeah, thanks, Ed. So I actually have a little bit of different flavors here for our viewers. One is a solid pick for your RRSPs probably, and that's XFN. This is from BlackRock, and it basically contains all of basically the major financial institutions in Canada, and that's Royal Bank, TD, Bank of Nova Scotia, Bank of Montreal, CIBC, the works. So basically, again, as the name suggests, financials ETF, right? And you can see over the last 6 months, it's up almost 18%, a little over 18%. So it's been seeing steady growth, and I think this has been fueled by the rise in interest rates, right? And like I mentioned in my previous segment, I think the interest rates are going to continue to rise, and so I think over the next 6 months, another 18 to 25% is probably pretty doable, right? So I think this is a great hold for the long term, obviously, either near TFSA or RSP. And it also pays out a dividend, right? So for those who are actually looking at making some more passive income, this is a good ETF to purchase and hold for the long run. Moving on, I also wanted to bring to your attention Tilray. So this is more so for our viewers that have a short-term mindset or a short-term time horizon in mind. And the cannabis industry obviously saw a good run over the past little while. I think early in the year it saw actually a pretty good run as well. But more recently in June, you saw a little bit more of a run up. I think at its peak it was about a little over $26 per share, and that's likely due to the merger with Afria. So obviously that was another big news that came out over the last couple of months. But since then, it's been a little beaten down, and as you know, I think for swing trades, beaten down stocks with long-term potential are pretty good, right? And the cannabis industry, I think, is due for another correction, not a correction, but a correction upwards, I should say, right? So I think it's going to catch second wind, and I think the meme stocks aren't completely done yet. And like you know, Syed, with the meme stocks, the cannabis stocks tend to run quite a bit as well. So I think this is a good stock to hold for at least, I wouldn't say a long-term hold, but I think you might want to hold it for the next 1 or 2 months and see where it goes, right? And if this industry picks up and the meme stocks continue to pick up again, this will see some significant gains, right? So, but again, this is more of a riskier pick, so obviously set your stop losses, make sure that you don't lose most of your position here, because again, it can go a lot lower than you would expect, right? So again, set your stop losses, making sure you have that figure in mind for how much you're willing to lose. But again, it has asymmetric upside, in my opinion. So it is something that, for full disclosure and transparency, I will be taking a position in. But again, I'm not a financial advisor, so obviously do your own due diligence before making any investment decisions. So obviously there's a little bit different flavors here, with Tilray being a cannabis play and XFN being a long-term play. But I like to give something for everyone, right? So I think both these picks cover both ends of the different investors you see. So hope this was helpful.
All right, so that marks the end of weekly episode 26. Thank you very much again for tuning in. We did take about 3 weeks off, but we will continue to provide you with consistent content going forward, if not for our podcasts, obviously on our social media, so TikTok and Instagram, we'll be posting updates for you there on crypto and the market and other trending topics in tech, cybersecurity, and all that good stuff. So be sure to check out our social medias. And for those of you streaming the podcast, thank you very much. And we'll see you guys next week for weekly episode 27. Thanks a lot, everybody.
Thank you, everyone, and have a great week ahead.